Hi everybody, welcome back. This is a recap of my April newsletter. And well, Q1 market volume picked up pretty much where 2021 left off, near record levels. And as a result, prices have now started to appreciate back up to where we were in 2019 and 2018. Now it's happened for a lot of reasons. Supply and demand. Demand has been off the charts and supply has been relatively tight. Now the places where we're seeing the greatest increases has been in the luxury market. And that's really been because there's been such wealth creation, especially during the pandemic. And we've seen phenomenal stock market performances. We have seen big bonuses. Work from home has changed things. People's behaviors are different. They're spending more time at home. They're looking for larger spaces. People are also looking to hedge inflation by buying hard assets. And then of course there's interest rates. Everybody's racing to buy before interest rates go up, and rightfully so because they are. But people are super paranoid about it. Let's just look at a couple things. Let's look at this chart. This is a chart put out by Freddie Mac that shows conforming rates over the past year. It is the 30-year fixed has gone from 3.1% to about 4.4%. That's a big jump. But now let's look at this chart. Let's put it into perspective. This shows the history of rates. Now compared to where we were back in 2002, 2001, we were nearly at 7%. And look all the way back to October of 1981. We were at about approximately 18.5%. Can you imagine that? So in relative terms, we're still very, very low. But with all that said, here's the interesting part. The market on the ground, it's all over the place. I mean, it seems like we're seeing a bit of everything happening depending upon what sector that you're in. But what I'm really finding is that there are fewer buyers that are actually executing. Not to say that there's not, don't get me wrong, not to say there's not enormous numbers of buyers and enormous numbers of buyers to get deals done. But the bench of real buyers is starting to narrow a little bit. Whereas we're still getting tremendous people getting tremendous showings, 30 showings, 40 showings. Whereas we were getting 3, 4, 5 offers, maybe 10 offers on specific properties, we might be getting 1 or 2 offers now. So that is narrowing. Now remember, it only takes 2 to create a competitive bid situation, but the question I have, is that a sign of something else to come? In the short term, I don't think so. Only because right now we're entering the listing season. So we're gonna have a lot of properties coming on the market and demand is gonna be equally strong. Primarily this year because I think people are still, there's a new wave of people that are settling in post-COVID. And this is the time of year where everybody moves and are trying to get resituated. However, come mid-summer, late summer, we may start to see a difference in the way deals get done. And the other factor we haven't spoken about, of course, is the war. How is that going to affect the global economy? And how, that's the big one. We're going to have to monitor that. But in the meantime, don't forget, on Thursdays, Burrows and Burbs is a podcast I do with my dear colleague, John Engel. We talk about everything New York real estate and the surrounding suburbs. You can see all the details of that and my full newsletter at www.robertocabrera.com. In the meantime, have a fantastic April, and I'll see you back here in May.